Pulver report. It's Friday the 16th. We have a big day today, and it looks like we've got some massive bears ready to knock on the door for the pre-market. So we'll take a look at everything this morning in the Pulver report. Before we begin, we understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the risks. Hey, if you're following me out there on social media, make sure you're following the real me, youtube.com/Chris Pulver, Mondays and Fridays for the Pulver report. Other social media outlets, real Chris Pulver. No numbers, no hyphens, no dashes, no double letters. I won't solicit, I won't direct message you unless you start it. So I'll reply, but you know the deal. Get a bunch of scammers off of social media because they do all sorts of stupid stuff. So kick them out. All right, let's get into the charts. Whoo, baby. Hey, it's Friday. This is what I was talking about. Pre-market, SPY, 383.26. Almost $7 to the downside. Took a look at the futures dashboard, and we're looking at a Dow Jones futures move, negative 1.13%. S&P futures down 1.23%, and NASDAQ futures down 1.29%. Top headline, a further 27% drop in the S&P could be coming if inflation hawks are right. Read an article this week on Ray Dalio, said the exact same thing, 20 to 25% more downside if the Fed is going to raise to 4.5%. He said it was simple math. Look, it's possible, and I'm just curious, where does that coincide? This line right here around 340 is the pre-COVID high from 2020. Let's say current price drops another 13%. Okay, I'll see what that is. So 13% to the downside is where I was looking at. Very possible fifth wave move, 13%. If we are truly going to embark on a move that is worse than 2008, then we would be looking at something along these lines. Now, that's not 20 to 27%. That's 55%. We come back to this COVID crash low, that's 43%. So where do they pull 20% from? Somewhere in here. 300? I mean, I don't see a lot of reason to have support there unless it's some type of technical move. Nevertheless, we're watching. I will say this week in equities on demand, the last couple weeks, in fact, we have been taking more stabs with some bearish positions. So I am filled on the SPY to the downside as well as the upside. It's a small risk on each one. You can see the trade right here. So this, if I am right, I get paid 70 cents. My risk is 30 cents. This, if I'm right, I get paid 75 cents. My risk is 25 cents. So even if I lose on this one, but I win on this one, I'm still going to make money. I also have some deep in the money bear call spreads on Apple. I have some deep in the money bear call spreads on the SPY. I'm also long the VIXM. So there are ways that if the market is dropping, I will be making some money. In addition to that, 80 to 85% of my portfolio is in options right now. So I have credit spreads, and a lot of that is hedged. So if the market drops, I just wait it out. I ride those expirations all the way until I have to either take assignment or maybe the broker assigns me. And if I get assigned and I don't want it, I'll just give it back and take a small loss in the credit spread. So stocks and options actually feeling pretty confident about how we're positioned. Currency strength-wise this morning, I did close up for some profit. We've got JPY strength, dollars in second, Swiss is right there. The pound took a big nosedive during the London session this morning. And with futures down, let's take a look at the Nikkei 225 overnight. So we are off these recent highs. There's a lot of consolidation going on in this Japanese market. And next week is a big week, right? We wrap up this week. Next week is FOMC on Wednesday, Bank Japan on Wednesday to Thursday, Swiss National Bank on Thursday. So 3 critical central bank decisions to wrap up the quarter. And we've got some big movements ahead. This week was already very volatile with CPI data on Tuesday. Let me chime in and say hi to everybody. Get logged in. Hopefully everything's coming through loud and clear. I think it is, right? Audio, yep, audio is good. Otherwise,
Every
that'd
Sunday,
be a weird 5
I'm going to
minutes.
send you my weekly option
Joe
pick
is in the house.
that
Wade
I'm
is
looking
in the
at
house.
for the
Hang
week
on a second.
for free. Pretty.
I gotta skip
Every
this.
Sunday,
A weird 5
I'm going to
minutes.
send you my weekly.
There we go. All right, let's mute that stuff. Okay, so we have Joe. Good morning, Joe. Happy Friday. Wayne is here. Chris is here. I've been watching the Beyond Capital videos. Good. We have a new one coming. We just diagnosed or digested the fund manager survey from Bank of America. So that video should be published today on that Beyond Capital channel. So on that note, as Chris mentioned, if you go to youtube.com, it's a brand new channel. We just started a couple weeks ago, but My partner and I, Jared Johnson, are going to be cramming in some awesome content for everybody. So just look for Beyond Capital Group and look for my face. So myself, that's Jared Johnson. You can subscribe to the channel, notification bell, all that good stuff. So we're posting, right? We're trying to post videos at least once a week. Market snapshots. We're in a hedge fund, so we're managing things. He and I are the co-portfolio managers, and we're going to be telling you what we're doing, what we see, what we're using resources wise. I mean, this is kind of we're using Beyond Capital Group. Our slogan is Wall Street meets Main Street, right? Because this is not the type of hedge fund where you have to have $1 billion net worth and your minimum assets under management would be 10, 15, 20 million. This is different. So anyway, it's been 2 years in the making. I've known Jared for 10 years. He's a great guy, great trader, and it's been a long time coming. So really excited about it. But just that being said, that doesn't change anything I'm doing with market traders. I'm still teaching trading rooms. I'm still running my flex trading room, my equities on demand trading room. I'm still building courses. I'm still teaching thousands of traders. So that doesn't change. It's just, I'm managing money. That's it. So all good. But yeah, thanks for watching. And again, all you have to do, because we're not at 1,000 subscribers yet, we don't have the custom name. Eventually it will be youtube.com/Beyond Capital or Beyond Capital Group. But for right now, just search for it. You can subscribe to the channel, get those videos, and we're posting those pretty regularly. Who else is here this morning? Wayne, good morning. I said that I think I got you already. Gary is here. Moach is here. David, good morning. Ruthann, good morning. Ruthann, thanks for that email too. You're watching Ray Dalio, right? Yeah, thanks for that email. Craig, good morning. Jason, good morning. TGIF. Yes, I guess. No, it's good, man. It's just going to be a busy couple of days. I'm taking a registration exam tomorrow for 3 hours, and then I've got a 24-hour road trip ahead of me. So somewhere in there, I'll maybe vibe out on some podcasts and have some fun. Okay, DW, good morning. Greg, good morning. Reverend Sergeant, good morning. Walter, what's up, man? All right. Yep. Ray Dalio is a smart guy. He sure is. And look, I'm happy that he's given back to the community. His principles book, his foundations book, the Changing World Order, all that stuff is very instrumental. There's not really a timeline on it, but he's accurate. One thing that amazes me about Bridgewater is they have essentially a process or an explanation for everything. If something is a black swan event, they're gonna track it, try to correlate it with something in history. But anyway, it's pretty amazing. It's probably scary, similar to like the control factors of like Amazon. But I guess when you're managing hundreds of billions of dollars, you probably have to do that, right? Look after your stuff. So anyway, that is that. All right, let's get back to it. So SPY pre-market is looking pretty nasty to the downside. Now, I said for the last couple of weeks, this doesn't have to be scary. This doesn't have to be, more uncertainty. I mean, look, the technicals could actually be very simple. This could be wave 1, wave 2, wave 3, wave 4, wave 5. It's not that hard, right? If it's a technical correction, that's what I thought comes back into COVID levels, pre-COVID levels around 340. Now, do we have capitulation that gets worse? Sure. Maybe it's the round number like 300, right? I mean, again, I'm not going to say that, oh, just listen to, Goldman Sachs or listen to Merrill Lynch. I mean, I don't know where they're getting 25 to 27%. I can look into that a little bit further, but technically, I don't necessarily see that level unless it's just a big round number target. But pre-highs, this is past resistance, becoming support. We pull back into this, bigger swing. I mean, I see some pockets in here, but 300 is a big round number. I guess I'm just a little confused. Like, this is a horrible situation with this broadening formation, because does it scare me that we could have this massive reset? Yeah, and I'll say this. If this happens, this is a projected if. If this happens right here, this will go down as one of the greatest bubbles and bursts and resets that the market has probably ever seen, because we have clearly engineered a bull market that probably stretched 4 to 5 years longer than it needed to. I mean, 7 to 8 year cycles is pretty common. 10 is pretty long in the tooth. We stretched this for 14 years, nearly 14 years from that bottom in 2009. Right? So if we have this massive reset and this SPY drops 50+% from the highs, that is as bad as 2008. Right? That is as bad. And fundamentally, things are not the same. Things are not the same as it was in 2008. I think the biggest difference is behaviorally, the sentiment is so bad that there's so much money sitting on the sidelines. And that is a video that you'll see in that Beyond Capital channel, probably get posted today, is looking at that fund manager survey, which comes out quarterly. There's $750 billion of managed money that's sitting on the sidelines. It's in cash, right? That's a lot of money. So there's clearly money to be invested, but it's not being invested. Now, also, if there's that much money sitting on the sidelines, that also means that you're not necessarily going to see this massive acceleration to the downside, right? Everyone's just sitting in cash. If they're sitting in cash, they're sitting in bonds, they're sitting in something that's like, look, just don't lose money. Preservation of capital. We'll wait for the coast is clear. We'll wait to start dollar cost averaging back in. And maybe it takes time. So a lot of this probably has to do with what we've talked about for the last several months and what this entire year's theme has been, which is this CME Fed Watch tool. This is something that you should be watching because I'm telling you, this has a huge influence over what the market has been doing this year. And it's been incredibly frustrating to watch it change. Let me log back in so I can type in a comment here. Give me a second. There. So I'm going to post the CME Watch tool. So if you want to take a look at that link, hey, Donna, what's up? That link right there, this is something we track every day nearly in the trading rooms. And the big change this week, I've got a screenshot of it. This was Monday this week, Monday the 12th. I took a screenshot of what the market expected the Fed to be at by the end of the year. Now, if you can see that, this shows a 70.6% probability that the Fed by end of year, which is going to be the December 14th FOMC meeting, by the end of the year, this is again as of Monday this week, 3.75 to 4%. Okay? Now, look at it right now. Look at how this forecast changed for December. Do you see that 3.75 to 4%? Now it's 6% probability versus 70.6. That's a huge shift, and you can see that the market is now anticipating, oh boy, the Fed's going to be potentially 50 basis points higher by the end of the year. Okay, now that right there, based on Dalio's article this week, I think it was in Bloomberg, he said 4.5%. If the Fed raises rates to 4.5%, that is a 25% move to the downside in equities. Another 25%. Okay? Now, again, are you going to blame the Fed? Well, there's a thing called inflation that still needs to work itself out. There's supply chain bottlenecks. We had a railway. I mean, I think today is the deadline for that railway strike, right? We had potentially $2 billion of activity every single day that is in jeopardy. And, Amazon's facing unions, Starbucks facing unions, Chipotle facing unions. Like, workers are not happy. I mean, it's really service industry workers that are not happy. There's 2 jobs for every 1 worker out there, but somehow, like, wages aren't good enough. Or they think they're not, but wages are higher where it's keeping, the labor market is tight. And yet it's just weird, man. Like, this year's just been so freaking weird. But we can't make any excuses. We can't just bury our head in the sand and say, "Oh, there's nothing we can do about it." I mean, look, you can be like a Bank of America fund managers, right? And it's not all Bank of America. That's a survey, but you can just hold on to a bunch of cash and wait for all this chaos and calamity to pass. But you do that, you're going to miss wherever the bottom is going to be. And I'm telling you this, just like we had this low in 2019, we had this low in 2020, and wherever this low is going to be in 2022 or 2023, I don't know where the low is going to be. But I do know this. If I have high quality stocks in my portfolio, I'm going to do everything that I can to hang on to them, lower my cost basis, and try to own them cheaper. Because eventually when this happens, high quality stocks will rise to the top. Companies that make money fundamentally, companies that have revenues, low debt, manageable debt, have a competitive advantage, have a service that everybody uses, they'll be fine. And my concern is that we might just have this bigger concentration in fewer stocks. And that was also part of the problem we had for the last decade. Is we had so much money in Apple and Amazon and Google and Facebook and Netflix, the FANG stocks. We had so much money in those that when they started to topple over, it dragged the broader market down with it. And if I talked about this 390 level in the SPY. I'll get to Forex here in a minute. Don't worry. Look at Apple. I mean, if you want to see what the SPY is doing, if Apple's making new lows, which it is, I saw a chart on yesterday at 152. Okay, so 152 is the close. We're looking pre-market at 150. This is open space to the downside. Look at this channel on Apple. We have support. We have support. We would have future support somewhere between 125 and 120. Now, again, I'm taking some stabs at the market. I sold a 140 by 145 bear call spread, collecting nearly $4. If I win on the trade, I win $4. My risk is $1. Totally manageable. I also own shares of Apple. I'm lowering the cost basis on that. I've got them covered out to the end of the year. So there's ways to make money if the market's going down. But does that mean that I'm crazy bullish or bearish and I'm buying a bunch of puts? No, because put premiums are super expensive. Another article that Jared and I did in Beyond Capital. Record put volumes. There's like $8 billion of put volumes, put option volumes in the last couple of weeks versus $1 billion in call option volume. So again, I don't know if that's all protection or if that's just everyone's getting super bearish. I'm not choosing a side. I'm not team bull, team bears. I am market neutral. I want to position the portfolio so whatever happens, I'm going to be okay, right? So it's a very protective time right now if you're managing, your assets. But again, I would rather do it that way than leave it to my 401 custodian to leave me in a bunch of targeted funds and just cross my fingers that everything works out. I would much rather be doing that than having a fixed income that is just getting crushed to inflation right now. I mean, I'm happy that I'm an investor, I'm a trader, and I'm hoping that you are as well. That's why you're here. Strikes apparently averted. Well, that's good. That's good. Okay, let's take a look at some currencies and some crosses. So here's the DXY. Dollar index, we had our CPI bullet on Tuesday. Still didn't break the highs yet. We're at 110.10. And still watching this larger 2002 demand. Actually, this is supply area. Are we going to stretch a little bit higher? Are we going to finally hit this 200 EMA? The Fed next week will find out. Because what is going to happen next week is they're going to raise rates. It's just a matter of, is it 75 basis points, which is 78% probability, or are they going to surprise the market with 1%? I don't think they're necessarily going to do that, but I think what they might be doing because of that change in expectations for December is they raise by 75 basis points, another 75 basis points, and then maybe another 50 basis points. And that's what gets us shifted over into that 4+% by the end of the year. Now, if the market is projecting 4.25 to 4.5 by December, I want you to look all the way out to July of next year. Do you see how it's not changing? It's not changing. So unless the Fed is going to start dropping narratives like, hey, guess what? We might have to get up to 6%. That would be, I think, that would be awful, right? That would be like, okay, we're going to brace for a 40 to 50% downside in stocks, more than likely. But if the Fed is trying to just, drip this information to the market and see if inflation data improves, because by the way, even though the market reacted like kind of a dummy on Tuesday, if you take a look at the inflation number, here's the year-over-year inflation tracker. Okay, it actually did go lower, not by much. We had a 50 basis points drop from the 9.1 to 8.5 or 8.6, and we dropped down to 8.3. So it did actually tick lower. The problem was we forecasted 8.1, it came in 8.3. So that's why the market reacted the way that it did. But still, if the year over year and the month over month and the core versus headline, if it is at least trending in the right direction, at some point, and this is what it's going to be called if you're looking for it, the pause. The Fed pause. If they're going to raise rates all the way through the rest of this year and be aggressive, then possibly going into Q1 of next year, they pause and they just stay, somewhat higher for longer. They're not ready to cut rates. They're probably not going to cut rates, not until this inflation stuff improves. So that's where we're at. Again, I feel like I'm just, no offense to horses, but I'm definitely beating a dead horse. But this literally is influencing the market so much. It's what we have to watch. If you want clarity in the markets, you got to see what the Fed's doing. If they keep changing their targets, which we talk about a lot in the trading rooms, this is making me navigate the markets differently. Less commitment to capital, more cash on hand, more, preservation ready to deploy at some point. I'm ready to get, cash back in the market, but it's not the right time. So trade a lot of options and certainly doing a lot of juggling in Forex right now. A lot of hedging in Forex that I've been doing. All right, DXY, FOMC is next week on Wednesday. Next week, Wednesday, by the way, I'm going to be Road trip this weekend. I'll be in the Utah office next week, Monday through Friday, the following week as well. I'm not going to commit to it because I don't know my schedule out there, but I was going to say I would like to have a bonus session on Wednesday during FOMC, but I'm not going to commit to that yet. If that is the case, then you can look for the upcoming live streams, and we'll do something like that. Maybe I can have Jared join me as well. We can be in the same office and have some fun. But I'm not going to commit to that. Anyway, I just know FOMC is next week. Here's the calendar. So next week's calendar right here. And it's a big one, right? So that's this week. We have CPI data coming out of Canada on Tuesday. We have the big old FOMC forecasted to be a 75 basis points hike. The market's already predicted that. Economic projections plus a press conference. We know that's coming at 2:30 with Jerome Powell. And then overnight, Bank of Japan. Bank of Japan, it's like a 3-hour window. They've got their policy statement, their press conference, and early morning Eastern time, or that Euro and London Open, Swiss National Bank rate decision. And holy crap, I didn't even know this. Who's seeing that? That changes a lot of stuff. Yikes. I didn't know that's what the Swiss is talking about. So what that means is they're going to look, the Swiss National Bank is looking to raise rates by 0.75%. A 75 basis points rate hike. Oh boy. I again find that quite perplexing compared to, I mean, they already have one of the strongest currencies in the world right now. It's also a safe haven currency, and they're looking to raise rates as well. I mean, Swiss inflation is like 3.5%. But well, the good thing is they're raising rates, unlike the Bank of Japan. So again, next week we're going to have a wild, wild window there in about 48 hours. Whoo, baby. So that I didn't know. I didn't know the Swiss National Bank was looking to raise rates. That's a big shift. They were negative 0.75 for a long time, since 2015, when they, black swan the markets with their surprise rate cut, but also they depegged from the euro. Negative 7.5 for a long, long time. They just decreased that to negative 0.25. Now they're looking at a jacking up of the rates to 0.75%, and that would get us to 0.5 total. So they'll be back in positive territory. Crazy. Oh, by the way, Bank of England has a rate decision as well. Another 50 basis points expected. So we have Fed, BOJ, SNB, and BOE. 4 rate decisions all next week. Excited? Terrified? It's going to be a lot of volatility. Crazy, right? Okay, so anyway, that's what's going on next week. DXY, that's where we're at. Big bar counts, but there's still room to run higher. Here's your weekly. Weekly's overbought, crazy amounts of overextended moves, 18-month trend. It's ridiculous, but it doesn't matter. Right now, if the market is uncertain, it's going to flow into the dollar. I still think the dollar has a correction coming, whether it's now or it's later. A dollar correction is coming. There's your 2000, 2001 high. Again, past resistance becoming support. I could see a dollar correction in here. Otherwise, if we stretch even higher, it's just going to be the rubber band effect that snaps and then reverts. It's just going to, maybe stretch a little bit higher and be even more irrational. So, all right, that's DXY. Let's take a look at Bitcoin for a moment. Ethereum, we had the big proof of stake this week, 19,751 on Bitcoin, so we're back below 20,000. I told traders, watch out for that bear flag. So we came back to the backside of the trend line. So we broke, we retested. That was a great spot to short for all the active traders out there. Otherwise, I just said, be careful on the buy side. I'm not convinced this is bullish, and it's not. It looks like that bear flag is playing out. We're probably going to activate this chart alarm at some point at 18,000. So again, if we go lower, I'm going to start connecting highs, maybe connecting lows. Perhaps we round out some type of falling wedge, or I'm just expecting as there's more probing. There's more, the SEC is exploring whether cryptocurrency should be securities, and that's a big. I mean, look, it's just a big regulation headache, and so we might have lots of consolidation. I think that if Bitcoin can hold here steady with this 20,000 support or this 18,000 support, that's actually a good sign, because if it starts to break lower, it's going to be hard to keep that confidence and excitement about, ooh, cryptos look great, because they won't. So again, I think as long as we hold this 20 to 18K, then that's good. But there's not a lot of chirping going on with Bitcoin right now. I think the crypto perma bulls have kind of hit the snooze button for a little bit, and we'll see what happens. Okay, Ethereum. Ethereum. So it was down like 9% yesterday, and that was after the proof of stake. So we have this big network merge, but again, not breaking lows, not breaking highs. I talked about this in the trading rooms this week. Possibly break the trend line retest, heading a little bit lower. If it does, watch this level right around $1,000. If we have some range bound trading here, this is crazy, right? If somehow your cost basis or you're just a trader, I mean, if you bought this at 1,000, it goes up to 2,000. It's a pretty good trade. Comes back down to 1,000, goes to 2,000. I mean, there might be some opportunities to kind of grind out some profits on Ethereum if you're more of the active trader type. Currency wise, let me just take a quick glance. Currency strength, we got the JPY getting a little bit stronger. That's good. I did take some profit on my pound yen this morning. It's at 162.99. We got a short trade going this week in Flex around 165 and change. Closed out for nearly 300 pips. The euro yen also looking to break lower. Big move on the pound compared to the yen. So glad we did both, but the pound is certainly the one that's paying out better. Also shorted the New Zealand yen. That's working out great. Also shorted the CAD yen. That's working out great. So looking pretty good. Right? Now, again, how long am I holding this? I will probably end up taking some profit today on some of these positions and looking to reestablish. Because for me, we still need to see some confirmation, right? It's exciting that, oh, wow, we got 4 days to the downside. Yeah, that's great. But we've also seen months to the upside. That's still the dominant trend. So until this overall structure starts to break, this might just be pulling back to a channel low, and we have this going on, and there's more upside channeling. Right? So there's still some potential downside, but I'm probably going to grab some profit. We're at a past resistance level. We have a pocket from Labor Day. I think this is a good spot to grab some pips. It's up about 80 to 90 pips right now, and take some profit. And I'll probably look to reload either at the high or wait for a trend line break, and then see if we get a flag pattern or another break. That would be something I'd be interested in trading, not scaling into necessarily. And then my other trade, Swiss yen has made some progress this week. Shorted at 150. It's still, pretty much at the highs, but there's a big Labor Day pocket around 143.75. So I'm hoping this will just drop back into that efficiency level, maybe have a little bit more to go. We've got a monthly pivot. And also we're sitting here at these crazy, crazy monthly highs. Historically speaking, though, it goes all the way back to 157 and change or 158. So if we're going to have some major resistance, it's going to be 157, 158. But right now, 150 is also a massive round number, and we're sitting at the top of a channel. So could be interesting on the Swiss yen next week, and hopefully, again, traders know this that have been with me. It's been quite the battle royale. But I've talked about all the positions I'm in: Swiss yen, Euro Swiss, what I'm doing, how I'm scaling out as necessary, how I'm still maintaining positions. And when the coast is clear, I'll add to them and I'll turn this into big profits. So if I can fast forward 6 to 12 months from now, I'm pretty sure I'll have a lot of profit. The hard part is just navigating everything right now. So anyway, those are some of the bigger positions. Other trades: Aussie CAD, pretty sideways. Aussie Swiss, I'm just going to flip through here. Aussie Swiss is heading lower, which we were wondering if that was going to be the case. So this big flush down, and it did in fact. It's pushing lower. So now I'm wondering, is it at equal lows, or would we come back and find this yearly pivot? Is it the backside of this channel, which could be the case here around 6,300? So possibly 6,300. It could be high to low, lower high to lower low. And then we're looking to build something back into this area to come back into a flat pattern. 6,000 could be a round number. Just be careful. I'm holding Aussie Swiss long mainly for carry. And I'm just waiting. I'm just going to wait to add lower. I said this week, maybe around 6,000. There's a really nice pocket here around 6,000. And we have our COVID crash low at 54. So I don't know if we're coming all the way back to there. I don't think we are. But if we have a projected move here, so high to low, lower high to lower low, we projected that to right around 6,000. So is this, if I go to 64 to 60, is that going to keep me? I mean, I'll stay in the trade. I'll just wait to scale in, but I think 6,000 is a nice little pocket trade. Okay. So that is Aussie Swiss. Aussie yen, we're looking for opportunities to short, and I know some traders jumped in here around. So I was hoping we could get a sell trade right at parity, 100, and we didn't get it. The high was around 98.50. But still, 4 or 5 days to the downside, it's dropped from around 95 and change, or 98, and it's about 300 pips. 98 to 95, give or take. Aussie New Zealand still holding short at 1150. Aussie dollar, we're at some lows. I'm just going to make an adjustment right here and just shift that trend line over just a smidge. If we're going to get a trend line break, there's also a larger channel here, right? Look at this bigger channel. High to low, high to low, high to low. Aussie dollar could head down into some channel lows. Another, structure level right around 6,400. Otherwise, we're looking at, COVID flash crash levels at 6,000 or 5,700. But again, that's just a massive reset. We could have support, we could have resistance, we could have this whole thing channeling as long as it wants to until it's time to go up again. What's going to be interesting if the dollar just accelerates and this becomes more of a capitulation move. But otherwise, it's just a big channel. And it's favoring dollar strength. So anytime you get a chance to sell it high, that's been working out pretty nicely. CAD Swiss at 7236. I'm going to buy some dips around 7150 and just hang on to it a little bit. CAD Yen, like I said, I'm short. Swiss Yen, I'm short. Euro Aussie should be heading up. I told traders this week we had a great look at our right trader charts in the Flex trading room. Some really nice 1-hour trends for the last couple of weeks. So, if you're buying some of those dips in right traders, an easy system that's visually friendly, I was offering some really nice entries with, 1-to-1, 2-to-1 risk reward, just following some nice trends. Euro CAD actually hitting resistance. We've already taken profit on this one. We're not in it. I'm not in it. I bought it at 3,000, took profit, bought it again, took profit, didn't buy this last one, but we're probably coming up towards this 3,350 to 3,400 zone. If you are long EuroCAD, that's fine. Just make sure that in the support level you protect some profit, right? I could see this being a correction. This past support becomes resistance, and then we head off for another low. So just be careful on this one because we've already flushed down, made a low or made a high right here, flushed down. If we make a lower high, I could still see another leg lower on the EuroCAD. Euro Swiss, we made a fresh low this week, but indecision candle, potentially the projection down to 9,000. That would get us back to the lowest levels that I have seen since 1975. So, again, is the Swiss being priced in for that rate decision? Maybe. But the ECB is actually positive. The ECB is at 1.25. The Swiss, if they're sitting at 0.5 after next week, it's still a slight differential there for the Euro Swiss. But Swiss obviously gets the nod for safe haven more so than the Eurozone. Euro Pound, big break to the upside in Euro Pound. All right. I see what's up, Euro Pound. Yeah, I didn't, I'll say this. I didn't want to sell it, so I'm glad I didn't. I was looking to buy it lower if we had a pullback around 84. Looks like the Euro Pound might be in some open space for a move back into this past support right here around 89. And then, that would be a pretty massive trend. If we go Euro Pound all the way to 92, well, here's what I'll look for. If we have a break, a retest, I can look for a buy opportunity in here next week. So something, I'm not going to buy it now, but if we pull back towards 87 or so, nice little trend line break, I'd look for a buy trade there. See if there's some continuation on that Euro Pound. Okay, nice, Gail. Thanks for tuning in on vacation. Dedicated trader right there. Euro Yen. Euro Yen, we shorted off the highs. We waited for the indecision on CPI. We shorted around 142.5. And stop loss is above the high at 145.5. So we're looking to see if this will come back into this Labor Day pocket around 140. Ideally, if it comes back even further, then 135 or 136 will take a bunch of profit. But we got activated on the trade, so we're going to see how this one plays out. Euro New Zealand, Euro Aussie, both heading higher. Euro dollar, we're below parity, but just clinging, right? FOMC, how much has been priced in? Do we still have a correction or a squeeze coming? Does Jerome Powell say something the market was like, oh, that was interesting? I don't know. Maybe next week there's a big surprise in FOMC. Technically, I'm still looking for, dollar index to hit the 200 EMA on a bunch of charts. Euro dollar is one, DXY, dollar index, dollar yen. There's massive moves there coming on dollars. Pound Aussie, no trade. Pound Canadian, I'm waiting for this trend line to break so I can just add to my longs. Pound Swiss has been a nightmare. This has picked up some acceleration to the downside, which does suck. I was thinking 112.50 to 110 would hold. All I'm looking at right now is I'm on the left-hand side of the trend line, so I wait. Right side of the trend line, I'll start adding. My break even is around 1,500. So I'm long on the Pound Swiss, and I'm looking at nothing. There's nothing to the left of this. It's below 2015. It's below 2016. It's in kind of open space to the downside. So how much lower do we go? I did put in a buy trade this week in my flex room at 1.000. So if this thing like flashes down to parity, I want to buy it, but otherwise I'll just wait for the trend line to break. Pound yen, like I said, shorted it, took some profit. That was about 300 pips, and that was a nice little short from post CPI. Pound New Zealand, let's stay out of this one. Pound US dollar also making some fresh lows. We're gonna have to see a trend line break in here, something like that. Outer trend line and inner trend line. No reason to guess where the bottom is. Just wait and see when this thing breaks the trend lines. Okay. Also, I was wondering if we would have the potential falling wedge, and it still has that look to it. It just needs to get on the right hand side of the trend line. It'd be nice to see the bulls actually step up here and start to squeeze and repair a little bit. So without a little bit more confirmation on the right hand side, I'm just going to let this one do its thing. New Zealand CAD, just hanging tough. That's a great trade for robots. New Zealand Swiss, we're at 57.30. I'm holding a trade at 59.30, and I'm just going to hang on to it a little bit longer. My next level, in all honesty, is this flash crash low area, 5,500 to 5,300. This would be a second order. This would be a third order. That would be if I'm going to catch this support level. We have a nice little pocket zone in here, nice little pocket zone in here. Eventually, it'll get hit. If this becomes support, this becomes resistance, then I'm looking for a base to form and then a rally back up. But I'm going to turn my New Zealand Swiss into a bit of a position trade. Small trade, but position trade. New Zealand yen off the highs, we shorted it. A lot of traders got some great entries at 87, 87.50. Right now it's trading at 85. So really nice move in that New Zealand yen. New Zealand dollar, we're back below 6,000. Just hang tough on this one. I'm looking for a long on it. Same thing with Aussie dollar, but it could be stretching again back down towards 56 or 55. Maybe this flash crash, right? The COVID flash crash low. Dollar CAD, 3,300. We had this big breakout move to the upside. Okay, so 3,300 is finally getting filled. Now I'm looking at it, and this right now I'm looking at like a short term fill. Because if I get filled at 33 and 33.50, we have a nice yearly pivot from 2021, right around 33.50. So I'm going to short it up here, look for a little reaction, and probably take some quick profit on the CAD Swiss. I'm sorry, the dollar CAD. If we have a channel like so, looking for the top of the channel to have resistance, give me a little love off that resistance and rejection and see if I can grab maybe 50 to 100 pips. Could I hold on to it for longer? Sure, but I'm probably not going to. If I get a decent trade with not a lot of risk, I'll just take my pips. So that dollar CAD position is finally getting filled. Dollar Swiss, we took a long yesterday. And same thing. This past resistance is becoming support. There's a lot of chop going on here, but it seems to be holding. So I'm looking to see does dollar Swiss make its way back up into 99 or 1.00. If we came back to this high, it's probably good enough. But if we came back into this pocket and this parity level, that's an awesome spot for profit. So I'm holding dollar Swiss long. And then dollar yen, 143. So we have some indecision. The BOJ spoke up this week and said 145 might be an intervention level. They're not going to let everybody know. They're not going to announce that it's just going to happen. So I think there was some profit taken this week. Quiet things down before the, it's going to be a circus next week. Fed, BOJ, Swiss National Bank, Bank of England, all in the same week. That's crazy as you finish up Q3. 145 could be a near-term top, but I did project a monthly symmetry around 147 to 147.50, and of course that big round number at 150 just in case. We're still on the left-hand side of the trend line, so I just don't see the case where the bears are in control yet. Right side of the trend line hasn't happened. So if we break and we look for a trend line break, sure, we have plenty of room. We've got an awesome bar count. We have 1,500 pips to the downside towards that 200 EMA, but my concern is that maybe it stretches up first and then just crashes later. Just gets more and more stretched, and that's the rubber band that breaks, and all of a sudden it snaps back to revert. But we don't know yet. We'll find. We're going to find out next week. This is what I've essentially been trading my back against the wall for. Is like, let's see what this does. Let's get ready for it. Okay. Gary, what'd you get filled on? 33 what? What'd you get filled on? Did you get? Oh, you got filled. Was that? I'm guessing that's dollar CAD. 3,300. Yeah, we should have been filled on that one. Okay, let me take a quick look at some exotics. Peso, don't really like it. Krone, there's some potential channels. There's like a channel situation here. I'm just, with the dollar getting so much strength right now, I'm definitely not looking to fight any type of exotic pair. Best place, in my opinion, to short this. There might be an opportunity here, like here-ish, to look for a short, but stop loss to be right above that. Otherwise, short this thing at a crazy flash crash high and then watch it be a giant carry trade. I mean, this could just go from massive high to massive low, right back up to a massive high, come right back down to a massive low. So, I mean, again, to keep your lens in the markets, to not lose your spatial awareness, go to the higher time frames. Go to the weekly, go to the monthly, use a price feed that has a ton of price history and data, and just make sure you're not missing anything. Turkish lira has not made a single break to the downside. I'm going to adjust this next week in class. I still have a stop sell order pending. I'm just going to bump this up. I could probably bump it up now somewhere around like 18 even and see if we have a move to the downside. But anyway, at some point, I'm sure this will cooperate and be favorable. But Turkey's in I don't know 80% inflation, so it's not working very well so far. But I haven't been filled on as a stop sell that hasn't been filled. South African rand, this one potentially, resistance. This was equal highs to the left back in 2016, but like I said, maybe it comes back up to the high again. So if we have some confirmation, it may sell off in a channel, but if this capitulates higher, then that's the better spot to sell it. 19.5, maybe high at 2. But again, just we'll talk about these exotic pairs and flex. I'm not doing anything on them right now. The dollar has not been dethroned. The DXY is still running hot. We're in an 18-month trend, path of least resistance. The Fed is dominating the markets. So we have to wait for that Fed pause, right? PAUSE, not dog pause. But the Fed pause looks like it's still here in December. It's just, is the Fed going to be at 4.25 to 4.5 by the end of the year? Are they going to hit the pause button sooner and say, well, look, we have inflation data improving? Because, by the way, we do get to skip a month, right? September rate decision, FOMC meeting, November FOMC meeting. So if the data comes in for October, September, October, we might not have to see the aggressive hikes in November, December, but that remains to be seen, to be determined. So, all right, it's 9:43. Wall Street is open, and again, massive gap to the downside on the SPY. 383 was the pre-market, and in fact, it opened right there. So here's your daily. Look at your daily SPY. Hold on to your butts, everybody, because we are breaking. Now, that being said, one thing that we see happen, we had gap right here, and then guess what? We filled those gaps with a massive downside move. Thanks, CPI. What do we have right now? Massive gap lower. If this is going to flush, this is the start of that fifth wave. This is good for my bear calls. This is good for my in the money bear calls. This is good for some of those long puts, just to be positioned for a little bit more of a breakdown. But I'll say that with this gap right here, okay, let's say that it is red and stays red and stays red and stays red. Guess what? We can make a fresh low and take out those June lows. By the way, that will be a bit of an anomaly. The markets, when they've had the one of the worst starts in the first half of the year, it didn't finish lower. So I'm curious if we tap the lows from June, maybe go lower, but we do not finish at those lows for the end of the year. I'm being serious. I mean, it might seem like, Chris, that's crazy. You want to buy. Yeah, I know. But I do want to buy because whatever is available down here will be a good opportunity in the short term for recoveries. Now, does it get worse from there? Maybe, right? Maybe it's just like, okay, we have a Santa Claus rally and it's short term and then sell it again in Q1 next year. But I do not think that we're going to close below these lows by December. So right now, I'm just playing the game. Lots of options, lots of cash at the ready, and, well, Alibaba's at the lows. All right, so I'm going to be lowering my costs on Alibaba. Anyway, that's that. But some of the bear call spreads are working out. Some of those jabs at the market, letting it, it's falling. So rather than like holding and saying, oh, it's going against me, it's like take some stabs at it. And same thing in currencies. Looking at your currency strength, we essentially have the dollar and the Swiss have been the most consistently strong currencies this year by far. The yen has been a nightmare, but they will probably have a wild and crazy and volatile repricing. At some point, the technicals will win out, and these JPYs will rebalance, and it will be extremely volatile. My concern, and I've been saying this for months now, is will we see a flash crash this year in Forex? It's very possible. We had two of them in 2020. We had one in 2018. We had one in 2017. We had one in 2016. We had one in 2015. We had one in 2012. But we haven't had one for the last couple of years. So it makes sense with some of the aggressive irrational trends that a flash crash is kind of the cherry on top or bottom to cleanse out the market and then start getting these big pivots and turns. But again, there's lots of victims with those flash crashes if you're on the wrong side of it or if you are over leveraged. So it's all about survivalship and stuff like that. Okay. All right. This session's been going on long enough. I appreciate you being here. If everyone would do me a quick favor before you go, don't jump out. Hit that thumbs up button for me. Like the channel. Do me a quick favor also. Jump over to the Beyond Capital Group channel. Subscribe to that as well. Between live sessions with the Pulver Report and some market snapshots and some hedge fund discussion with Beyond Capital Group. Hope you like the content. You know, I'm again, it's all free. Enjoy it, right? Here to navigate the markets. We're trading stocks, options, forex, gold, silver, Bitcoin, cryptos, whatever. You tell me. You know, that's what I trade. So hope it helps, and let's make some sense of this crazy market. And as I say, see it, protect it, collect it, right? All right, buddy. Have a great weekend. Next week, there might be a bit of a schedule change for me because I'll be out of office. I'm going to be in Utah for the next couple weeks. So I will not be sure. So I'm not sure what the schedule is. I will certainly be doing a market recap on Friday for YouTube, but I'm probably going to be still driving on Monday morning. So I don't think I'll be doing a Monday morning session. But what I could do is I can get a video together and just post a video on the channel. So I might not do it live like I typically do on Monday mornings, but I can post a video and just upload that little market outlook for everybody to kick off the week. All right. But I appreciate being here. Thanks for watching. Thumbs up button, like the channel, help the YouTube algorithm, all the good stuff. And see you next week. Okay. Equities on Demand students in the trading room. I'll see you in 13 minutes. Everyone else, have a great weekend. See you next week. Bye-bye.